Hey, welcome back. And as you can see, our topic today is Super Tuesday. It's election season, and that's why I'm here with Daniel Westergaard, who's our Chief Investment Advisor. And I'll throw it to him by saying, Daniel, do elections matter?
Great question, Tim. Yes and no. Yes, elections matter for social and political reasons and in determining the future of our country. As many Americans, we take pride in exercising the ability to vote. So we're not saying elections don't matter or you shouldn't go out and vote, but what we are saying is elections don't matter very much at all for your investment portfolio or your financial plan. The stock market, as you'll see on this chart, operates very much so like my 2-year-old son when I give him the choice between two cars, a red car or a blue car. Sometimes he chooses the red car, sometimes he chooses the blue car. Either way, he has fun playing and doesn't think very much about the color. As this chart shows on the screen, the US equity market is also agnostic to the color red or blue. The market consistently over sustained periods of time has moved up and to the right. If you take a close look at this chart, there are up and down years in both red and blue years. The companies we own when we invest in the stock market often don't care very much who is in office. Their job is to run profitable companies. The CEO of one of the largest banks in the world had this to say when he was asked recently about who would be a better president for business. My company will survive and thrive under either president. A very powerful statement. Company CEOs are paid to operate their businesses profitably, regardless of the political backdrop or the president who's in office. As investors and owners of these very companies, we need to have the exact same mindset. Regardless of who's elected, we are going to survive and thrive. On the next slide, we look at one of the biggest mistakes. The biggest mistake you can make is to sell out of your investments because the opposing party was elected. This chart takes a look at exactly that. Only being invested in the S&P 500 or the largest 500 companies in the US equity market when your preferred party is in office. So look at the red line, look at the blue line. They're drastically lower than the black line, which is staying invested regardless of who's in office. The primary reason for this is if you were only invested during a red or a blue president, you would only be invested for roughly half the time of the market. And as we know, time in the market is much more valuable than timing the market. Said differently, stay invested for the long term. The final nugget I'll leave you with is this: how markets have performed during election years, such as 2024. In 19 of the past 23 election years, 83% of the time, the US equity market has had positive returns in an election year. The average election year performance has been just over 11%. As always, past performance is no indication of what future returns may look like in 2024, but this does give us a little bit of context. To conclude, elections do matter, just not for your investment portfolio. Hope this helped answer such a timely question, Tim.
Thank you. Thank you. And if you have any questions about this or anything else, or even if you have a suggestion about a future episode of one of these that we put out, let us know. We'd be happy to answer your questions. But until next time, thanks for tuning in.